think we're ready. We have our speakers here. How are you, John?
All good here. Thanks, Hugo. Super busy, as I'm sure you are. But yeah, an exciting call coming up today. Lots going on with Fleur, and I've been hearing the word or the tagline "DeFi Summer" quite a bit.
Oh,
So exciting things to come, I'm sure.
indeed, I think so. I think so. So, should we kick off and introduce our guests?
Yeah, sure. But before we do, I'd just like to ask everyone in the audience to please do feel free to like and retweet, get the word out there. This space is recorded, and we're going to be talking about all things DeFi here today. We're kicking off by celebrating a major development for DeFi on Flare, and that is the launch of USDX, which is the first native stablecoin on Flare, alongside a dedicated clear pool T pool, which is able to generate real world yield for holders. This marks a significant step forward for the network. This collaboration between Flare, Hextrust, and Clearpool promises to unlock a new wave of DeFi innovation and utility on the network, plus support the rollout of F assets, which I'm sure many of you in the audience are so keenly waiting for. Now, this ecosystem call is a little bit earlier today because we are joined from our special guests who are from Hong Kong, and that is Jacob and Edward. So, indeed, let's jump into some introductions. First and foremost, thank you for joining. And maybe we can start with Edward. Maybe you could introduce yourself and a little bit about Hextrust.
Yeah, absolutely. Thanks for having me. It's a pleasure to be here. So Hextrust is a digital asset service provider with a focus on markets, custody, and staking. We're based in Hong Kong, but active across the world with licenses in Hong Kong and Dubai. Personally, I run the markets business here at Hextrust, helping our clients solve for their financial and trading needs. My background is in traditional finance. I did over 10 years at several investment banks in Asia before making the jump over to crypto full-time. I've joined the wonderful team here at Hextrust to basically help create a leader in crypto financial services.
Perfect. Very concise summary right there. I know that some people with their introductions can overextend a little bit, but Jacob, how about you? Could you please talk to a little bit about
Yeah, I
yourself
try to.
and Clearpool?
Yeah, sure. Thanks for having me. I'll also try to be concise. My name is Jacob, and I'm one of the co-founders and the CEO of Clearpool. Clearpool is a DeFi platform for private credit on chain. So basically, as a user, you come onto the Clearpool platform, and you have a lot of different lending opportunities where there's real companies as counterparties. We have been going for about 2.5 years, and so far we facilitated over $500 million in loans. The borrowers on our platforms are all institutions, and they range from trading firms to prime brokers and finally fintechs for now. And we've just also made that first step into also offering a tokenized treasury product. So we're very excited to have this collaboration with Hextrust and Flare Network. Just a bit about myself. My background comes from startups, fintech, and traditional finance as well.
Perfect. Well, thank you both for the introduction. And Edward, maybe we can sort of unpack USDX in a little bit more detail. So USDX, it's the first native stablecoin on Fleur. How does the pegging system work between that and the US dollar?
Yeah, absolutely. So one of the main tenets of USDX is it needs to be secure, it needs to be backed. So we have a 1-to-1 US dollar backing minimum at all times with USDX. Now, this is very important, of course, because we've had previous situations of stable coins not being fully backed. So we have a transparency dashboard as well to ensure that the backing for the stablecoin is always there at minimum 1-to-1. And of course, those proceeds are invested in very liquid, short-term treasury securities to ensure basically the best liquidity and zero default risk for holders of USDX. And of course, going through Clearpool's new T pools, they can then get access to those exact yields that we're able to provide.
Yeah, I think, transparency is of the utmost important when it comes to a stable coin, right? And it's great to see that you have, a dashboard and whatnot. Interesting. So,
Maybe we could just jump in very quickly and ask Edward and Jacob to just explain a little bit what the T pool is and what treasuries as an asset are, because not everyone here is going to know specifically what is meant by a treasury bill.
Yeah, of course. Maybe I can start with the T-bill question. Basically, the U.S. government issues various sorts of debts at various different maturities, and treasury bills really represent the shortest part of that curve, of the maturity curve. So we're talking effectively government debt securities against the U.S. government that are basically fully backed by the U.S. government and that have maturities in the 1 to 3 month range. So we're talking about, effectively the risk-free rate, right? So what most people would consider risk-free, because the U.S. government is always able to satisfy their short-term treasury debt. There has been no history of default ever in the entire history of that country, and it's basically seen as the most stable possible investment that you can make with your money. And with interest rates the way they are now, it's probably very attractively yielding for effectively next to no risk. So, that's really what we're trying to get at here is there is a way to build a stable coin that does have native yield, that has almost no risk, and that has one-to-one backing. And that's really what we're trying to target building here.
Yeah, maybe I jump in here. Now, so the T pool is a pool on Clearpool where, any DeFi user on the Flare network can come and stake their USDX stablecoin and then earn that treasury yield. If a user comes on Clearpool, stakes USDX into the T pool, they would effectively get a so-called LP token, or liquidity provision token. We call it CUSDX, which is like a receipt token that they will get into their wallet, and this token will allow them to earn this risk-free rate. Currently, this rate is at 4%. The really exciting part of this, LP token, this CUSDX, is that this is once again a fungible ERC20 token that then can be used as a composable token within the Flare ecosystem. And at the same time, it obviously generates yields for its holders. And I think this is going to be also very interesting for the Flare DeFi ecosystem as a whole. And it's going to basically, represent a very interesting primitive for the Flare ecosystem. On top of it, for launching this T pool, any depositor will also earn an extra yield in Flare rewards. So if you are currently depositing into the T pool, you get 4% USDX return, and then you get another 4% in Flare token rewards. So overall, you're basically getting 8%, which is very attractive considering the, I would say, limited risk involved, as Ed explained really well.
Yeah, I mean, it seems like a very powerful combination for DeFi. You have something that is, transparent, fully backed, stable, and then the ability to earn yield on this, and not just with, the T-bill yield, but also with Flare too. Pretty exciting stuff, but I want to maybe stick with Edward here and maybe ask you to elaborate on the precautionary measures in place to ensure that the stability and trust in USDX exists, such as insurance coverage or maybe reverse compensation.
Yeah, so as I mentioned before, it's always one-to-one back, but actually there's a fair amount of buffer in terms of reserves to ensure that there's always liquidity available. So in a perhaps liquidity crunch situation, people who do want to come and redeem the token, there's buffer in place to make sure that they can redeem those in a timely manner. The other thing, of course, is the smart contract has been thoroughly audited by Hacken, and as I mentioned before, the transparency dashboard ensures that there's always one-to-one backing. We are working on additional external third-party audits to ensure that these are actually verified by licensed auditors. And ultimately, the main thing that when it comes to backing and potential depegging events is just liquidity, right? Making sure that people are able to redeem their stablecoin for fiat or vice versa when needed, right? And I think that's a really important point here is that if in order to build confidence in the stablecoin, people need to know that they're able to redeem and mint on demand, right? And I think that's really what we're trying to work towards here is making sure that we do have a fully backed stablecoin that is both liquid and secure.
And Edward, I think it's important to note that the assets backing, USDX, which is most entirely short-term treasuries, that is the most liquid market on the planet.
It is effectively the most liquid market on the planet, and we also hold those with top-tier traditional finance custodians. So effectively, completely safe.
Very nice. If we talk about a little bit about acquiring, and we highlighted redeeming there, but how I'm sure many people in the audience will be like to know this. How can people actually acquire USDX, and what is the process of redemption? Are there any fees associated with that?
Yeah. So since we're in the first phase of the rollout, we're currently limiting the creation and redemption of USDX to KYC counterparties. So this is, for regulatory reasons, but we are working on deploying liquidity pools within DeFi, both across Flare and across Ethereum, to basically give people access to USDX against any asset that they wish to swap for.
Interesting. So, is there plans to allow other people to natively mint, or are the main, retail investors going to acquire theirs through the DEX, would you say?
Yeah, I mean, given that there is a fiat component to this in terms of the minting and redemption, unfortunately, from a compliance and reg perspective, we do have to be a little bit more strict about that, given that there is a movement of fiat. So that's why we're limiting the pure creation and redemption down to KYC and KYC counterparties only. That being said, given how important this is to the growth of the Flare ecosystem and creating a composable and decentralized stablecoin, I think the most important thing is producing that liquidity so that anybody can buy and sell USDX as they need against any sort of asset that they have.
Yeah, I mean, it seems like a very attractive option, as we mentioned to earlier with the inbuilt yields, not just with Flare, but USD as well. So yeah, I'm hoping that it should bring quite a bit, and there's already quite a bit that's been minted on the Flare network, if I'm not mistaken.
Yes. So we're working with a lot of liquidity partners now to basically increase both the supply and the reserves available in USDX, as well as rolling out those liquidity pools, as I mentioned. So yeah, stay tuned for more announcements on that.
Well,
yeah, maybe on that note, we are, at Clearpool also very excited because we only launched the T pool approximately, I think, 5 days ago, and we already crossed the $10 million deposit mark, which is very fast. So we're excited, and we think there's going to be a lot more growth coming in the coming weeks and months. But if it continues like this, then we're very excited, and this is going to be a very interesting product. It's going to drive a lot of TVL, for us at Clearpool, and obviously, on Flare as well. And I think, this is obviously also then very interesting for USDX as a stable coin. I think, as Ed mentioned, right now it's still, in its first phase of rollout. But, as there will be, secondary liquidity, as there be liquidity on different chains, then USDX should really become one of the leading stablecoins.
I guess maybe just on a side note here, with USDX being issued natively on other chains as well, are there any plans for interoperability between that asset, between chains?
So we're in discussions with a few different foundations, but the plan is that we want a stablecoin that can be bridged across multiple different chains, right? I think part of the reason why USDX is exciting is that we're seeing the barriers to entry for innovative and novel chains to have a native stablecoin getting higher and higher. I think with Circle, they charge millions of dollars for quote unquote integration work. And we're hoping that with USDX, we can lower that barrier to entry and basically create a truly accessible and democratized stablecoin that can exist across multiple chains.
Very
so
nice.
To answer your question, we're looking for different bridging solutions to basically onboard as many chains as possible and make USDX a truly decentralized stablecoin.
Interesting. Yeah, looking forward to that. I guess let's move to Jacob for a little bit for answers on Clearpool. So, Clearpool has a strong focus on real world assets as well. Can you elaborate on Clearpool's current involvement in tokenizing real world assets and how USDX fits into this overall strategy?
Yeah, so as I think I mentioned previously, Clearpool is mainly a private credit marketplace. So what we've been doing is tokenizing, actual real world loans to real world companies, different types of institutions as counterparties. We started off with a heavy focus on trading firms. These are leading crypto native trading firms such as Wintermute to Wall Street trading firms such as Jane Street or Flow Traders. Other counterparties that we currently have also within the crypto ecosystem are large prime brokers, and recently we also started to have fintechs as counterparties that are involved in any type of sort of like receivable financing. So as lenders, as DeFi users can get access to this very interesting lending opportunities with vetted institutions. So usually access to this type of opportunities are only available for maybe like other institutions, maybe high net worth individuals and family offices, and Clearpool is basically providing that infrastructure to allow access to anyone in DeFi, regardless of how much available capital they have. This is the focus of Clearpool, and with the T pool, we actually have made our first. We started also offering tokenized treasury yield as an investment opportunity on Clearpool, which is something that we are very excited. I think tokenized treasury is going to be the start, and we're also looking to potentially offer other type of opportunities such as high yielding bonds, etc. In the future. I think something to say here with USDX. USDX obviously was the first asset that we have launched this T pool with, but we are also planning to launch other private credit opportunities utilizing USDX and also utilizing the Flare network.
Interesting, and it seems like Clearpool has quite a strong start as well, because you've originated over 530 million worth of loans since the protocol launched, right?
Yeah, that's correct. So we have launched our protocol over 2 years ago now, and have crossed the $500 million in loans originated mark recently. As I mentioned, we've been working with quite a lot of leading institutions in this space, from crypto native ones to really also like more TradFi institutions. We also have, different types of products. We have seen that, we started off with a fully permissionless product that was available to anyone in DeFi. We then, realized that there was an opportunity for larger institutions. However, those larger institutions required, that they had stronger compliance requirements. So we launched another product called Clearpool Prime, which is fully dedicated to larger institutions with higher compliance requirements. And now, T-Pool marks the next evolution of our product suite that we're very excited about.
Interesting. I was going to ask about the risk mitigation process. So you alluded to earlier that a lot of the people that are actually lending the assets, they're institutions, right? So borrowers, how are they assessed before launching pools? And do you have any KYC measures associated with that?
Yeah, so on the borrowing side, everyone needs to be KYC'd, and there's also legal agreements, master loan agreements that every borrower has to sign before they open a pool on Clearpool. And then on top of that, we have quite a rigorous risk assessment procedure. We're obviously, doing all type of due diligence. Has the borrower had any like on-chain loans, off-chain loans? Did they repay those loans? How strong is their operational setup? There's going to be a financial statement analysis, and then on top of that, this is done by our partner Credora. They're they're the leader in credit risk assessment in the crypto space. We're also doing a real-time credit risk assessment. So all of these borrowers, they need to connect some real time accounts. For example, the trading firms, they would need to connect the API keys of the different trading venues they trade on. For example, their Binance accounts, and then we're able to see in real time, how many assets they have across all the different venues, and it can be tracked whether there's any substantial change. And by doing this, obviously, we can sort of like avoid we can react quicker as we see whether the financial standing of a company is going significantly worse. All of this is then being put together into a rating. So every single borrower on Clearpool currently has a rating associated. And there's quite some granularity and reports about how this rating is being compiled with.
I see. So that's something that is ongoing as well. So, Hugo, I see you've got your hand up. Do you want to chime in?
Yep. Just for the sake of clarity, I want to make sure that everyone knows that, with the T-Pool on Flare, that is Treasury, US government Treasury assets. So effectively, the borrower is the US government. What we were just discussing was C-Pool, which is where there's lending between essentially a lender and a borrower, and that's different to the T-Pool. Just wanted to make sure that that's well understood.
Yeah, that's a good clarification point there. Speaking of T-pools, I think that's what a lot of the people here in the audience are excited about. Maybe you could run through the structure of a T-pool and, I guess the workflow for someone who wants to utilize the platform.
Okay, yes. So you would need to go onto our platform, clearpool.finance, then go into the app, and then you would see a section which is called T-Pool. So you just click on that, and then obviously, as we previously mentioned, you would need to have USDX in your wallet. Right now, I guess there is no real secondary market, but that's something that's coming up. So any Flare user can obtain USDX. Once you have USDX, you can simply deposit the USDX into the T-Pool, and then in return, you're receiving a CUSDX, which is a one-on-one representation of your USDX, sort of like a receipt token. We call it LP tokens in DeFi. You will then automatically start earning the USDX, and as mentioned, on top of it, you would also earn some Flare rewards. Currently, the total rewards you'll be earning are 4% on USDX and 4% on Flare. So overall 8%, without really, any or with very, very little risk. These rewards, they would accrue on a block by block basis, allowing you to see your returns grow directly on the Clearpool app. Also important to note, there's no lockups. You can deposit anytime, and the yield would accrue immediately, and then you can also withdraw anytime, and that's also like a novelty compared to a lot of other sort of like tokenized treasury products out there, where you have to wait, a few days, a weekend, etc., in order to withdraw.
Yeah, I mean, that makes it really attractive for the DeFi participants, no lockup and being able to see the rewards accrue real time. And the yields actually, as we mentioned earlier, it's built of both FLR and USDX treasury yields, right? So I guess let's maybe talk about where the yield comes from for the T pools, and what is expected to be the annual yield range for the lenders. Can you explain the factors that might influence yield fluctuations if they are due to change? And maybe Jacob, you can start with the FLR rewards and the FLR side of things.
Yeah, so from the Flare rewards, we have received a grant from the Flare Foundation, and I think we are currently the yield is currently set at 4%, which is obviously very attractive. We intend, I think, together with Flare, to keep them very attractive, but obviously over the period of time, as the pool grows, the yield might be capped and be reduced going forward. But for now, we're aiming to offer 4% yield for the foreseeable future. And I pass it on to Ed, who can better explain the outlook for treasury yields, I guess.
Yeah, so on the treasury yield side, obviously, this is tracked to U.S. government interest rates. So whatever the prevailing short-term interest rates are in the U.S., that's what will be passed back. That being said, we currently leave a little bit of a buffer to be able to meet redemptions and redemptions quickly and instantly. And the idea is that as we get better liquidity and as we improve operations, that buffer is going to decrease to the point where almost all of the rewards will be passed back to USDX stakers. So from a treasury yield perspective, actually, I expect that to go up in the short term, provided that US interest rates don't change.
Interesting. So that side of things is, I guess, more of a variable, whereas
Yeah,
the
that's
FLR
right.
side of things is a little bit more stable and dependent on the amount of liquidity provided there. So, yeah, that's something important to consider. Yeah, so I guess let's go to Hugo and talk about this collaboration in general. What actually motivated the collaboration, and why is a native stablecoin on the Flare network so important?
Absolutely. Well, I mean, I think we can separate this into a couple of things. The first is, the emerging use of, real world asset protocols. So, if you take, the Clearpool system, you've got a treasury pool, so you can deploy a stablecoin into, the T pool, and you can get treasury yield. And then there is a C pool, where you can deploy stablecoin or potentially even other assets, I assume, down the line, and lend that to an accredited borrower with essentially a known or a predicted default risk. So you can set your interest rate as you like. So I like, this is fundamentally what is happening in real world asset protocols across various blockchains. Clearpool is practically one of the biggest. Like either number 1, 2, or 3, and so it was a no-brainer for us to start getting that onto Flare. And then, we also separately, if you put aside Clearpool and the partnership between USDX and Clearpool in the T pool, it was just important for us to have a native stablecoin, and we can come on to why native stablecoins are useful. So very, very important in DEX trading. It's very important to have a stablecoin in order to have liquidity on the network, which, as people can see, is starting to be built. One of the objectives of the foundation is to have a sizable amount of USDX issued onto the network, so that there is sufficient USDX there when it starts being filtering through to DEXs, so that there's liquid pools, so that the trading is efficient, things like that. Useful for collateral in perps vaults, and useful, of course, to borrow against with your assets, whether they be something like Flare, where you would be borrowing against your Flare in Kinetic, or borrowing against your F assets in Kinetic again. So you might take some Bitcoin or some XRP, you might convert that into F Bitcoin or FXRP, and you might borrow dollars in Kinetic on Flare against your FXRP or F Bitcoin, and you might do something with those dollars. So very important to have a native stablecoin. We obviously want to have other stablecoins brought to Flare, either natively or bridged, because there's a very big market, especially DEX markets, between stablecoin pairs. So something like USDX against bridged USDT or bridged USDC. These can be very valuable markets to have as a basic DeFi fundamental on a chain.
Yeah, it's interesting you mentioned that, Hugo, because I believe Gnosis may have hinted at such a pool actually between two stable coins. But stable coins are essentially the foundation for this liquidity layer that we're seeing being built on Flare, and it's really good to see, just even for as you mentioned, the DEX liquidity. Um, I guess I'd like to ask, what are you most excited about with the USDX and Clearpool initiative? What excites you most about this partnership, what's happened? And yeah, let us know.
Well, I mean, I think that there's a couple of things. So one, I like the players behind it. Hex is built by Hex Trust, which is the issuer of USDX. Is built by a group of people very, very firmly from existing TradFi. Serious people. Not it's important if when you're talking to people that when you're working with people, partnering with people, that they're serious players. They're not they're not there's an awful lot of people in our industry that are not like that. So I was very impressed with Hex Trust, very happy with the team there. They're licensed both in Hong Kong and in the UAE, which is valuable. So that's sort of one of the key reasons why I'm sort of excited about that. But really, the most exciting thing for me is CUSDX is use in F assets. So in order to understand this, let's go back into what an F asset is. If you bridge traditionally, you bridge something like Bitcoin to another blockchain, traditionally you're relying on trust. You're relying essentially on people to sign transactions across two different chains. And if they don't do that, you lose your money or your money gets stuck. And that has always been to us a fundamental flaw in using something like Bitcoin or XRP on another blockchain. So we've been building for a very long time something we call the F-Asset protocol. Now, the F-Asset protocol kind of removes that need to trust the person signing the transaction across chains. It does that effectively by making that person have an awful lot to lose if they don't do their job properly. And that what they have to lose is the collateral they've put in a vault. And it's over collateralized. So if you're bridging $100 of Bitcoin, the collateral will be at least $150 in some proportion of assets. And in the F asset system, that proportion of assets is split between a stablecoin or a stablecoin claim receipt like CUSDX, and native, so flare. So the two assets that are securing that transaction across chain and retaining the value of the bridged Bitcoin or XRP or Dogecoin or Litecoin or whatever ends up being in the in the F asset system. The collateral underpinning the value of that token when it's on Flare or indeed bridged from Flare to another chain is a combination of stables and Flare native. And it'll probably start out somewhere around 2x over collateralized. The problem with over collateralization, especially when it comes to stablecoins. So if you think about the collateral that you're holding with Flare, the collateral component that is Flare within the vault, that yields because you can delegate that. You can delegate that to a signal provider, an FTSO provider. And so that means you can get yield on that. What we haven't been able to do is, until now, find yield on USDT, USDC, because there haven't been protocols that enable you to do what you're doing with Clearpool and get that treasury yield. So now, with the use of USDX and CUSDX, it means that the collateral that will sit under the F assets can be fully yielding, both the Flare and the stable coins. This has some really amazing effects. It means that we're far more likely to get more collateral in the system, enabling the creation of more units of F asset. It also means that the bridge fees should be lower because there's less need for very, very high bridge fees. So when you mint and redeem your token, you pay a fee. And when you use the token on Flare, a very, very small transaction fee goes to the collateral providers because the system must remain secure. And the only way it can remain secure is by incentivizing the collateral providers to keep their collateral there. So by bringing CUSDX in as collateral, it really resolves one of my biggest fears for the F assets was that it was too capital inefficient because it allows a person with collateral to be fully yielding at all times and collect the mint fees and collect the redeem fees and collect the trail transaction fees. So for me, that's the most exciting thing. But of course, there's huge amounts of things that it can be used in DeFi. I like the idea of lending dollars, whilst at the same time getting yield on those dollars. It's a very interesting possibility.
Yeah, I mean, just to, I guess, summarize that, it sounds like CUSDX is going to be fundamental for the F asset system because, well, especially for the agents, because it almost turbocharges their benefits where they're able to provide that collateral, but also earn with this stable coin as well, which means more more collateral locked up in the system, which means more, I guess, F assets are able to come across. But it also means that you can balance out the fees for creating these F assets because they're almost offset by this yield, this inbuilt yield of the stable coin itself, right?
Yeah, so being able to get this yield on a stablecoin as opposed to the previous position that the industry was in, which is where you can't get the yield, and the yield is pocketed by the stablecoin issuer. I mean, there are reasons that people have wanted to create a lot of stablecoins which don't have yield. It's been incredibly lucrative, especially as interest rates have gone up. But fundamentally, for the F asset protocol, it's a total breakthrough because it means that it just makes the system way, way more attractive for people to lock collateral in. And that's what you want when you're trying to create a collateralized bridge. So it also means that, one of the cool things it also means is that actually the collateral in the system is increasing. Because if you start with 100, at the end of the year, you have 108. So it means that your collateral is naturally increasing, which makes the system safer, which is very, very desirable for me. It also should reduce the actual cost of bridging because it means that the collateral providers in the F asset system do not have to charge as high fees in order to get the same sort of, all markets have a balancing point between supply and demand. And all collateral providers will, be looking at, okay, where can I provide collateral? I can provide collateral on these 8 chains. Where is the best risk-adjusted return? And this makes the risk-adjusted return substantially more desirable.
Very nice. So I'm so looking forward to F assets and this utilization of CUSDX as well. It's going to be interesting. But I guess
Well,
Hugo, the last.
you might then be quite interested in following over the next couple of days.
Ooh, is that a little cheeky hint right there? I'll keep my eyes peeled.
I mean,
You know, I always do.
there's no sort of hidden aspect to the starting of the F asset open beta. I think everyone knows that's coming. So yeah, quite excited.
Yeah, as am I. As am I. So I guess the last question here would be to Hugo. How do you envision USDX and the T-pool attracting a wider user base to Fleur within the broader DeFi landscape?
Well, I think, first of all, real world asset protocols have been very, very successful and are getting more and more successful. So having that on Flare as one of the first places that it exists is incredibly, interesting. As soon as then there are bridges to Flare, whether it be CF assets or otherwise, it means that people could start, give you an example. We could bring Bitcoin to Clearpool. I don't know if Bitcoin is currently being used in Clearpool on other chains, but suddenly people could start lending effectively in Bitcoin or XRP to other people that need it, or are happy to take the price risk. So that's a good example. But if you look at the CUSDX, which is the treasury yielding version of the stablecoin, this is very valuable in all the other DeFi protocols. So imagine you want to have collateral for a perps DEX. You have a choice. You can put a stable coin in that does not accrue additional value, or you can put a stable coin in that can accrue additional value. It's desirable to use that stable coin that can accrue additional value regardless. The same goes with lending. If I'm borrowing, if I'm borrowing dollars, it's quite nice to be able to go and get a yield on those dollars. So I think generally it just makes sense that there is a stable coin that has yield attached.
Yeah, and I think it would be interesting to observe the amount of people that may consider bridging from another stable coin, or swapping another stable coin for USDX because of that inbuilt yield. So that's going
Well,
to be interesting.
I think if you look at, say, the F asset system, right? There's going to be the F asset system is not static. You don't just bang in collateral and then it just stays there forever. Your collateral is either going to be, increasing in value against your position, the issued F assets, or decreasing in value against the issued F assets. This means you have to have an economy. Means you have to have DEXs. Means you have to, as an agent, you can either be withdrawing excess collateral, or you'll need to be topping up when your collateral gets too low. This then drives DEX trading. DEX trading then incentivizes participants from other chains to come because suddenly there's a lot of activity. So the engine for, I think, a lot of what's going to happen is going to be around creating an economy around the F assets.
Yeah, I agree completely. And USDX seems like quite a key component of that, to incentivize people to, well, first of all, provide the liquidity, and come to the Flare network as well. But if we move on now, I wouldn't mind opening up the floor to everyone here and have a bit of a discussion. So anyone can feel free to chime in with these questions. I'd like to know, what are some of the future innovations that you envisioned for USDX, the T pool, or even future collaborations between your companies?
Yeah, I think Jacob.
Yeah, I think I can take this. Yeah, I think we we really like this collaboration between the three parties, and we're excited to be on Flare Network. As mentioned, we are very, very pleased with how the T pool has been shaping up in just 5 days. So we think that we can do a lot more with Flare. As I just mentioned, right? Right now we have the short-term treasuries. There might be other similar pools where users can maybe earn higher yielding bonds, or other higher yielding bonds, or other yield opportunities. And I think that could also be interesting to do with Hex Trust as a partner. Then obviously we have our regular lending and the lending and borrowing platform, where currently the main asset is USDC and USDT. I think it would obviously also make sense to open pools with USDX on the Flare network. But as Hugo mentioned, we are also open. There's also demand for other type of assets, so we could also have lending pools for BTC or ETH, or other type of assets. So I think we have the very, very beginning of this collaboration. We're very excited to get new products and new opportunities going with Hex Trust and with Flare as partners.
Yeah, I'll just add on to that. This is the first product that we've started as HT Digital Assets, which is the tokenization platform of Hex Trust. And there's a reason that we chose Flare as the first place to start. We view them as a key partner. We've had past collaborations with Clearpool as well. And really, HT Digital Assets, we're looking to really start proper tokenization of real world assets in all shapes and forms, right? And the deployment of F assets on Flare, we're very, very optimistic on. So really, I think, as Jacob said, this is just the beginning of the relationship. There's going to be much more to come.
Looking forward to it. And Hugo, actually, this is a bit of a side question, because I recall an article that was written about the initial VC investors for Fleur utilizing some of the proceeds to reinvest in the DeFi landscape. Could you see them potentially minting some USDX as part of that support package?
Oh, absolutely. They have to put in 50% of anything they sell back into the ecosystem, and that can be into investments in DApps. It can be into liquidity provision. It can be into creating liquidity provision would beget the issuance of USDX. So yeah, absolutely. But having said that, I have noticed that when I monitor them and when I speak to them, they haven't exactly been sellers. So although that's not surprising.
Yeah, I'm not surprised either. It seems like there's a lot of things that are happening just around the corner, and I guess speaking on that, on opportunities, what is everyone looking forward to most, and trends and development that are happening in the broader blockchain space? What excites you, and I guess what opportunities are out there for USDX, Clearpool, and DeFi in general?
I think there was always I think RWA has been a buzzword for a lot of years now, but it never really got large mainstream adoption. I think this cycle might really be the cycle where RWAs are going to boom. And I think there's certain reasons for that. Obviously, the whole sort of like BlackRock involvement with the BIDO product also legitimized tokenization of treasuries. Large players are coming into the space. I think, as Hugo rightfully mentioned, so far, the biggest sort of like adoption for RWAs were obviously stable coins that were a really, really lucrative business for, or are a really lucrative business for Circle and Tether. But I think, we now have the, necessary infrastructure and the necessary legal structures that have been proven to work really well to really move towards having this yield bearing stable coins, yield bearing tokens that are obviously game changing for DeFi, because if you can actually invest in real world assets, but then unleash the power of DeFi, the composability of DeFi, then I think RWA in DeFi actually becomes better than just holding those assets as normal in the real world. And that's what I'm excited about. I think there's a lot of developments that have been developing over the past years, and I feel now we are at a point where composability and actual DeFi usage of RWAs is going to become a thing, and this category is going to grow significantly over time. The other thing is also compatibility of different sort of like compliance solutions. I think we're still not yet there. A lot of different apps are still having different compliance requirements, but once these things are being solved, I think the RWA sector is going to be very exciting, and this is why we are very excited to be playing this field and have partnership like this one and product like this one that are going to drive this further.
Yeah, I'm going to add to that. If you look at every cycle prior to this one, there's always been talk of RWA as being the holy grail, right? This is the pipe dream of crypto, is that you can bring all assets on chain and then make it fully composable, infinitely divisible, fully transferable. So that's always been the dream of democratizing access to finance and access to assets. I think this is the first real cycle where we're seeing meaningful TVL, meaningful interest, real institutions like BlackRock and Fidelity coming into the space and saying, actually, this is a reality and we want part of it. So yeah, to echo Jacob's sentiment, that we think RWA is probably the space to be looking at now. You see that reflected in the crypto prices of tokens like Ondo and others. I think the market tends to agree that this is really happening. And yeah, we're excited for where that's going to take us, and all the different things that you could potentially do in DeFi with a robust RWA ecosystem.
Yeah, I think real world assets, again, it's something that is really yet to kick off, and I think a lot of that was maybe to do with regulations, possibly. But as you say, you see these big companies really stepping into the crypto space now, which legitimizes it. And I guess we've got a lot to look forward to with real world assets, and especially with yield bearing stable coins. So yeah, exciting times. Hugo, what are you looking forward to most in the broader blockchain space?
I think I'm broadly interested in seeing this tokenization trend come through. I want to know what people can do with equities and with other types of asset on chain. I want to see markets evolve around less speculative asset types. I think that will be interesting because we've shown that composability is a thing that is very interesting and desirable. But we have largely, restricted it entirely to highly speculative crypto assets. So, I have a bit of a background in TradFi, and seeing this play out is very interesting. And then obviously interested in where Flare fits in that, especially with its data protocols, its ability to get data from these various systems. I think there's a huge opportunity there. I think there might be a huge opportunity with Flare as a USDX issuance chain for that to be bridged from Flare to other networks. If say for instance Clearpool is setting up more T pools across the space. So I think it'd be quite nice if Flare, it becomes a primary USDX issuance chain. So those are a couple of things I'm interested in. Obviously, I'm massively interested in Flare as a chain for Bitcoin entering these various DeFi ecosystems in a more trustless way. The same with XRP, the same with Dogecoin, the same with Litecoin. I think I think there's an interesting aspect of being able to lend out Bitcoin or XRP against some other perhaps real world asset, or that's kind of sort of my interest space. And then, of course, AI. But that's a much longer conversation and a far less financial conversation, as in much less around financial markets.
Yeah, no, I know you're pretty big on machine learning, Hugo. I guess that's maybe something that's a little ahead of its time right now. But I guess we'll see. I do want
I
to.
just think it's a fundamentally very different use case. Like, currently, what we're discussing is DeFi, finance on a chain in a decentralized manner. Blockchains have a lot of usage for AI, but fundamentally it's less financial.
Well, like you say, Hugo, maybe a conversation for another day. For everyone that's in the audience, I'd love for you just to maybe give everyone on the panel a follow. We've got Jacob, we've got Edward, and of course Hugo and Fleur. Lots of great conversations today. This space has been recorded. For anyone that may want to re-listen to it, there's a lot of information to digest. And maybe we can go through the panelists and ask for some closing comments before we wrap up here. Jacob, do you have any closing comments?
No, yeah, I think I would just like to thank everyone for having me and having listened to this space. And yeah, I think for all the ones in the audience, we will work to make the whole USDX obviously more accessible, so you can actually acquire USDX and participate in this. I guess very attractive opportunity right now, right? This is basically the risk-free rate plus an extra 4% in token rewards. It is obviously not as high as some of those very degen pools, but from a risk reward perspective, I think this is probably the best that DeFi is currently offering. So I think once USDX is available, this is going to be a very interesting opportunity for everyone to take. And yeah, as mentioned, we're very excited to continue and further deepen our collaboration with Flare and Xtrust and watch this space. I think we're at the very beginning, and there's a lot more to come.
Thank you, Jacob. Looking closely and watching as always. Edward, any closing comments?
Yeah, I mean, I think this whole initiative has been a long time coming. Both all Hextrust, Clearpool team with Jacob and Hugo and the Flare Foundation, we've been working very hard together for a long time to make this a reality. So glad that this is finally coming to fruition and we're seeing this kick off. But as Jacob said, we're just in the beginning, so really optimistic and really looking forward to all the possibilities that this can bring and what value we can bring to Flare ecosystem supporters.
Perfect. Jacob, Edward, I thank you on behalf of everyone in the audience for coming along today and sharing your insights. And I'm going to leave the floor to Hugo now to take us out. And thank you once again, Hugo. I know you're a very busy guy. It's been a great ecosystem call, and I look forward to the next one.
Thanks, John. Thank you, everyone, for coming. Keep watching, the channels, especially Flare over the next couple of days. But also, have a look at Hextrust, have a look at HD Markets, have a look at Clearpool. I think they're doing incredibly interesting things.
Well, that's it, guys. Thank you all again, and enjoy the rest of your day, and speak soon.